Good afternoon, everyone. We welcome you all to today's webinar conducted by onlinetaxupdate.com. To give a brief info about the website, it shares recent update in GST, articles written by experts like Vimal Jain sir, Shailesh Seth sir, and among other well-known authors. It has a note section as well, where GST law is presented in a note format, PPT and slide format by CMA Anil Sharma sir, for a professional taxpayer to learn GST. It also has a note section and judgment analysis under logic title authored by Advocate Nidhi Agarwalji. A newsletter are also shared on a daily and a weekly basis at a nominal fees. You are requested to visit the website and share your feedback. Today's topic of the webinar is GST refund, and the topic seems to be common, but the intricacies involved in this is very detailed. So we let us understand what are the provisions of GST refund and scenario where the refund is eligible, time limit, and issues mainly in processing of refund from department side, and guideline in brief how to go about the GST refund. And today's speaker is CA Saradha Hariharan. She is well known in GST era, GST for field. A brief intro about speaker is she is distinguished chartered accountant, specialization in GST, and an enthusiastic speaker and author in the field of indirect taxes. She is a mom entrepreneur, being co-founder of GGHS and co-LLP Chennai. About her professional career, she has started her career at KPMG in audit and assurance and held a key position in finance and taxation in large scale industry. Currently, she is practicing in indirect taxation advisory, litigation, compliance, audit, transaction structuring, and legal opinion services in indirect tax for various industries, including marine exports, automobile, power sector, IT, air conditioning, and HVAC, FMCG, real estate, leather exports, hospitality, healthcare, etc. She is expert in GST refunds, FTP, and other benefits for larger scale exporter and handling GST litigation, tax opinions, and transactional structuring. She is also a public speaker. She is a renowned speaker on GST at forums including CA and CMA Institute, GST Department, NASIN, various Chamber of Commerce, professional forums, universities, and other educational institutions. She is also an author, and she has reviewed several GST publications for IDTC of ICAI, Handbook and Interest, Late Fees and Penalties, Practical FAQs under GST, FAQs on Supplies and Taxability, FAQ on ITC, Background Material on GST. She is regularly writing articles as well in technical research articles in professional newsletters and online expertise forums, including ICAI. She has recently started digital journey as well in GST in short under title. With her passion to create an ease of understanding a complex subject for the larger purpose of one nation, one tax, she shares her strong GST knowledge through videos in both common and regional language, garnering over 26,000 plus Instagram followers within 1 year and a significant presence in social media platforms like YouTube and LinkedIn. Her innovative and trend-setting style of giving many complicated technical GST updates within 1 minute time frame has a wide reach, popularly known as GST with Sharda in short. About her personal interest, she is a avid traveler with a passion for exploring new places around the world. So this was brief intro about the speaker, Sharda ma'am. Now let us go to the topic without taking much time. Ma'am, over to you, Sharda ma'am.
Thank you, sir. Thank you so much for the kind introduction. So let me start with the session straight away since we have very limited time. So I just want to revisit on the time that we have actually, sir, because it's now 2:41 precisely.
Yeah, so actually it was 2:30 to 3:30. So it is 2:40 means 3:40 we can, and then 5 to 10 minutes for this question answer Q&A.
Okay, so which means before 4 we need to wind up everything. So
Yeah,
let's plan it that way. Okay,
yes.
great. Very good afternoon to each one present here. And today's topic is GST refund. And I mean, the topic I would say it requires, I mean, even if we are going to have a one full day of seminar or webinar also, it has its own implications, it has its own complications and the kind of depth that is there and practical relevance for almost each and every taxpayer is extremely, critical and wide. So this is a topic which, as I said, it can even be deliberated for one full day, but right now we have only 1 hour. Okay, so having said that, I just quick, question to all the participants over here. How many of you have actually applied for a refund? So far, have you practically dealt with refund in GST? Just give your response. Okay, many of you are raising your hand. That is fine as well. Okay, so good, which means I see only a very few handful. So many have not handled as well, and most of you have handled as well. Okay, good. So good to see this, varied kind of participants who are here. And how many of you are, so basically understanding this, I have issued refunds. Okay, that's wonderful. So I think we have a department officer as well in this. So which means, is there anybody who wants me to deliberate things from the scratch in terms of what is refund, export with payment of duty, export without payment of duty, what is inverted duty structure? Should we actually be dwelling upon these kind of fundamentals and basics? Is there anybody who would like to have an understanding of these things, or should we directly jump into the updates and complications? So if I can get some response, just to make sure that nobody should feel left out. It should not be a case where we touch upon too much on the basics and somebody thinks no, it's too much basics, we expect something more, and vice versa. We should not be deliberating too much on the complications without even understanding or touching upon the basics. May I get some responses? If somebody has absolutely no idea, I'm trying to kind of get this understanding for the first time. So your responses in the chat box would be helpful. So let's be participative, interactive, so that your response is very important. So procedure, issue refund, I'm new for it. Please discuss basics. Okay, so we get mixed responses. Okay, fundamentals as well. It's always good to go back to fundamentals, yeah, because even the fundamentals like section 16 of IGST or section 54 of CGST, all these things have undergone changes. Even in this Finance Act, very recent last month there was a finance budget, right, July 2024. Even in that we have a couple of changes, which means even the government is still working on the fundamentals. Forget about what we are doing. So on those lines, we'll definitely touch upon the basics at a glance, and then we'll also be discussing on the issues as well. Okay, so let me share my screen quickly. Um I hope my screen is visible to all. Just give me a yes so that I know that it's visible. Yes, yes, yes. Great. Thank you so much. Okay. So, quickly, these are all the cases in which refund can be applied in GST law. Okay, so it starts with export of goods or a CZ supply deemed export and UN or embassy. Appellate authority related, once you get the order, appeal order, based on the order, you will also be asking for refund, including the pre-deposit refund or whatever it is, accumulated input tax credit on inverted duty structure, pre-deposit, whichever is made by casual taxable person or non-resident taxable person, excess payment, whatever that you have made due to mistakes, and the international tourist. This is currently, not in force, but very recently, what I have got to understand is that the purpose of this introduction of B2C e-invoicing, if you have seen the latest 54 GST Council meeting based press release, which has been given by the finance minister, there it was specifically clarified at the end that this new introduction of B2C invoicing is actually intended to give this refund for international tourists. Okay. So refund on account of taxes paid on advances, and then CGST, SGST, vice versa. I know the hit change in terms of the payment of taxation, and then the balance in electronic cash ledger at any given point of time, refund to unregistered person. So imagine, there are so many types of getting refunds in GST law. Okay, so if you can see, it's not just for exporters, or it's not just for a CZ or deemed export alone. It has got its own big list of cases. So you never know when you are going to be a person who may be in requirement of having a refund case. Yes, so it has got a wide range of implication. Now, quickly, if one wants to understand the refund as a subject in GST law, you have to basically go through all the provisions which is there in the Act, section 54 to 58, and then the refund rules and the notifications and recent amendments. Most importantly, circulars play a very vital role in refund, because refund is, there is a procedure which the government has to establish, CBAC has to establish, and that's always given through a circular. And some of the beneficial communications, most of the time it comes only through circular, because taxpayers always go for whatever is beneficial through the circulars. So court decisions, of course, we do have a n number of decisions in refund, because the assessments have happened only in the recent time. But if you see, refunds have been happening from 2017 onwards, so we have a lot of court decisions as well, and some of the practical issues which are still open ended. Yes. So if we look into it from the perspective of erstwhile law, how it was, and to the travel to the GST law, some of the major bottlenecks which were there in the previous law has been overcome in this GST law, especially like faster dispersal and electronic kind of automated GST refund processing. Especially if you are an exporter of goods, you will know the speed at which actually refund is being processed, and reduce the time that has been taken for even processing the manual refund, because everything is now online. There is a monitoring mechanism as to when your replication has gone and when the refund has been sanctioned. So, broadly, I think the refund as a mechanism has been completely upgraded. Even within GST, also, see, I have been practicing, or I have been handling GST refund related cases right from 2017, right? So I am able to witness the speed or the ease with which one is able to get refunds in the recent time as compared to how it was in 2017 or 2018. 2017-18 used to be a mess, because most of the officers don't even understand what is refund, and even the taxpayers don't understand how that needs to be made, and there are n number of challenges, especially after Circular 125, wherein the electronic refund process has been introduced. There has been tremendous shift in the way in which the refund process are being handled, right? So I'm sure in the last 7 years of GST practice, we in our organization would have helped our clients to get almost 100 crore plus refunds to get it sanctioned. So with that experience, I can confidently say that refund processing has been by and large eased in GST law. But having said that, we definitely do have still a lot of complications, lot of technical challenges, and most importantly, lot of legal challenges are still left out. I'm sure portal related glitches and all those kind of things have been done away with by and large. So what is the time limit for refund? To begin with, there is something called as a relevant date, and from that relevant date, it's only 2 years. So from that relevant date, your time period starts clicking, and within 2 years, you should have made your refund application. Okay, I'm not getting into each and every aspect of it, but broadly, it is 2 years if it comes to goods from the date on which the export happens, and when it comes to deemed export, there is a specific provision which has been given. So all these things have been defined in the explanation which is given in section 54. There is an explanation which clearly defines what is a relevant date. So every particular scenario of refund that we have seen at the beginning has got a particular relevant date. From the date, you have to calculate 2 years. That is the time limitation. So if I have to give you an example, for example, if it is inverted duty structure, it is a due date of furnishing return under section 39, which is GSTR 3B. So if you are making an application, let's say for July 2023. So July 2023, what is the due date of making an application? It is August 2023, 20th August 2023. So that is the date from which your 2 years period starts clicking. Okay. And interestingly, for services, you have got a very good, relaxation, because when it comes to receipt, because in the case of services, sometimes the service invoice would have been issued, but the money might not have been received. So it's the money receipt or the invoice issue, whichever is later. So the law acknowledges some of the practical challenges which the businesses would be facing. So, recent changes which has been introduced in this particular relevant date or the time limitation, that is what we are going to see next. For this UN embassy kind of refunds, initially it was 6 months, and that has also been made to 2 years, in line with however way it was in the in the other cases. Okay. The other important change is that for SCZ, nothing has been specifically given. Until until previous year, there was no specific relevant date which has been given. As you can see here, SEZ has been very recently inserted with effect from 1st October 2022. So until October 2022 or before that, there is no specific provision as to what is the cutoff date for SEZ. So quite naturally, it falls into the residual category. So now it's defined as a due date for furnishing return under section 39 in respect of such supplies. So when that supply has been taken, so this is applicable both in respect of the SEZ, wherever the SEZ, the supplier to SEZ is claiming the refund, or the SEZ, whomever has received the supplies, they are making the refund claim. So however be it is, whomever be the person who is going to claim the refund, in both cases, the refund, the relevant date is going to be calculated from the due date of GSTR 3B. So this is another reason change if I have to call for. And one more thing, but by now we have already come to a sunset clause with respect to this particular COVID relief. But still, I thought let me touch upon this. Maybe if you are having any kind of continuing disputes, this would have been relevant until February 2024. If I have to go back, the reason being, we all know what is the COVID era, right? So the COVID era starts from March 2020 to February 2022. That's the 2 year period, even as per the Supreme Court decision. So this period gets completely excluded for the purpose of your refund calculation. So which it doesn't mean like you get 2 years plus 2 years, it's becoming 4 years. It's not a straightforward math. So whatever is your actual due date, okay, and you calculate plus two. But during this 2 years period, you eliminate this dark era of March 2020 to February 2022. That's how it needs to be calculated. So to give you an example, we have some examples here. So June 2019, if you see, it gets extended until because the in between 2 years period is completely getting cut off. So for June 2019 we actually had time until only June 2023. But if you see for June 2020, it's not that you can add plus 4 and bring it to June 2024. It doesn't work that way. It stops by February 2024 because it's the 2 years period after excluding the COVID period. So in this case, if you see the scenario number 2, it is a June 20 to February 22. This period gets excluded. So there is a period which gets excluded, and after and before that period of exclusion is what needs to be factored for you to determine what is the 24 months period or the 2 years period. Okay. So this is the way to, work out the COVID relief. So I'm sure, if any of you have made any claims until February 2024, you would have had much relevance for this. But right now, the relevance is almost lost because, the COVID extension has all come to an end. Okay. But anything that you have made as an application prior to February 2024, if it got rejected, if at all you have made an appeal or anything, in those kind of cases, this would still be relevant. So when it comes to this time limitation, one more thing that we need to factor is that the deficiency memo, wherever
Ma'am,
you have been issued. Yes, sir.
I'm just, yeah, the PPT is not visible. So whether you're showing it or
Yeah, I'm
how is
actually
it?
showing it.
Yeah, but PPT has got removed, I think.
Oh, is it?
Yeah, yeah,
Okay.
yeah.
Not sure why. Okay, let me. So from when on this has been happening?
2 3 minutes, I think, because I thought you were explaining on some point, but then
Okay,
that
let me
there is
share
a
it again.
yeah,
So was the screen visible?
yeah. Now it is visible.
Yeah, previously also whether you were able to see these examples which I was running through for the COVID relief.
No, no, no.
Okay, okay. But anyway, I think this is going to be available in the presentation, and I think that's going to be shared as well, right? So that should not be a problem.
Fine,
So
fine.
moving on, there is something called as deficiency memo that you would have seen. So there is a difference between show cause notice and a deficiency memo. Typically, deficiency memo will be given if there is anything apparently some kind of documentation which should have been furnished as getting missed out. So something of that sort. Okay. So it's not a show cause notice where the officer is proposing for a rejection. The objective of deficiency memo is not to reject. The objective of deficiency memo is to say, see, there is something which is deficient in your application which you have made. Please do make a fresh application after correcting this deficiency which is there in your application. So that is the whole objective of deficiency memo. So this is being issued in RFD 03. So the important point here to understand when it comes to the time limitation is that normally whenever you make an application, from the date of application till the date on which deficiency is being communicated back to the taxpayer, this intervening period also will get eliminated for the purpose of the 2 years calculation. So which means what, if you have made an application and after, let's say, 4 months later or something, you are receiving a deficiency memo. So that 4 months is getting excluded. But again, the time which you are additionally taking for making the fresh application, that is still within your 2 years of calculation. What gets eliminated for your 2 years criteria is the period from the date of application till the date on which you are being communicated with RFD 03. Okay, so this is broadly, the refund flow, especially for those of you who have not experienced or who have not actually got to work on any kind of refund application. This will give you a basic understanding. So basically, do your
Ma'am,
Excel workings. Yeah.
just there is work request from the viewer that go slow like that. So even though
Okay.
you are taking it, so just a bit
Okay,
slow.
I understand.
Yeah.
I'm actually sorry because we have 1 hour of limitation. That would have been the reason. So is it okay with all if I'm going to go slow? Just wanted to get the participants' view. Should I go slow or is this space okay? So I'm getting yes, but I'm not able to understand what is the meaning of yes. Go slow or okay. This space is okay. Okay. Little bit slow. Okay, go slow. Okay. So couple of you are asking me to go slow. So I'll factor that as well. So thank you for this feedback. So make sure that you keep adding up whatever is your feedback so that that would be helpful. So getting back to where we were. So this is broadly the flow of, or the flow of refund process. Initially, you will make a workings in your Excel statement or whatever it is. So make a refund workings, and then you are going to derive what is that. And usually, when we make this refund working, sometimes you can also kind of plan your refunds in such a way that you get the optimum amount of refund, especially in the case of something like inverted duty structure. You have this provision, there is a circular also which very clearly clarifies that refund application can be made for any period. Okay, there is something called as relevant period. The relevant period is the period that we are choosing. It can even be across 2 financial years. So which means what, if I'm making refund for export, it's not necessary that I have to apply it on a monthly basis or a quarterly basis or a half yearly basis. No such condition. I can even apply from February to May, cutting across 2 financial years. That is also permitted. So it is at the liberty of the taxpayer to make their own refund submission for any period which they are intending to. Okay. So on those lines, sometimes your strategy of how you want to make the refund applications, especially making sure at the end of the day, you need to be compliant with the act, and you need to make sure that you are actually following the GST refund rules. If these two are properly being complied with, any kind of planning that is within the legitimate lines is completely fine. So wherein you are able to work around what is the optimum way of getting the refunds, and based on that you can make the refund application. So especially in the case of inverted duty structure, sometimes we do face a scenario where the refund amount itself varies based on the period that we are accumulating or we are eliminating. So those kind of things also we have to do when we are doing this refund workings. And then preparation of whatever is your relevant documents that needs to be attached as per annexure, which is given in circular 125. When you are in doubt, now if you want to know what are all the documents that needs to be submitted for each and every category of refund, please do make a note of it. Circular 125. Circular 125 is the master circular for GST. The last page of it, you get something called as an annexure. In that annexure, it will be very clearly mentioned as to what exactly is the document that needs to be furnished under each and every category of refund. Okay, so make sure all of these supporting documents or your workings or annexures, everything is being prepared, and then make the electronic application filing in RFD01 along with whatever be the statement that needs to be validated in the portal. Okay, for most of the categories of refunds like export or inverted duty structure, there is a statement that needs to be validated in the online portal. That validation happens by way of verifying the database with what has been already filed in GSTR 1, okay, and as well as 3B. Okay, so then the ARN gets generated. After the ARN gets generated, the officer is going to scrutinize the application. And if there is something that is incomplete in terms of what needs to be submitted itself, then you will be given a RFD03. That is the deficiency memo will be issued. And again, before you make the application, you should also have a verification on your time limitation. Okay. So as I said, exclude the time limit that is from the date of application till the deficiency memo for the purpose of this calculation. Then the applicant has to rectify whatever that is there in the deficiency memo. Based on the deficiency memo, make all the rectifications and then file a fresh application. And if it is accepted, you will be served with acknowledgements, which means either you receive deficiency memo in 03 or an acknowledgement in 02. Either of these two you will receive after making the application. Here forms plays a very important role. Okay, so make sure that those of you who are working on refunds almost regularly will know the importance or the relevance of these kind of forms, especially in GST. We know everything has got one A, B, C, everything is getting added. So acknowledgement is received in RFD 02. And after that, you will also be receiving a provisional refund order in RFD 02. Sometimes it could be there, but not always. We also face most of the scenarios where the final refund order itself is directly being sanctioned instead of having one provisional and then going for the final refund. So early days of GST introduction, yes, officers were opting for provisional refund, but currently it is all the direct. Predominantly, by and large, it's only the direct refund final order that is being issued. And then apart, along with the refund order, you will also be receiving something called as a payment advice, RFD 05. These payment advice had a very big relevance in the first 3 years of GST law because everything was manual at that point of time. We used to kind of struggle because when you're, let's say your jurisdiction is central, though central officer is going to sanction your refund, still for the payment purpose, the GST part alone will go to the state nodal officer. So these kind of confusions were there, but currently you don't need to worry about all those things. You are allocated with only one jurisdiction, either central or state. Only that officer is going to process your refund sanction. There is no separate order that is going to be passed or processed for CGST, SGST, IGST. It's only one officer who is going to centrally process all the three categories of taxation. Okay. So you get the final order RFD 06, wherein probably there could be one portion which is being sanctioned and one portion other portion which probably could have been rejected as well. So, but the important thing is whenever there is any portion which is being rejected, the most important point here is you should have been served with a show cause notice. Show cause notice will be received in RFD 08. So if you receive RFD 08, which means there is something which the officer is proposing to reject, maybe in full or in part. So there is something which the officer is proposing to reject. So it's very important that you need to give a complete detailed explanation against the query which has been raised by the officer in the show cause notice. So based on that, the officer will be scrutinizing it, and then you are going to receive this final order in RFD 06. So, I mean, once you receive that final order, you are going to be the money processing is almost automatic now. There is hardly any issues that we face in the recent time. But what happens when something gets rejected? Okay, that's very important. When something gets rejected, the taxpayer has got two options. Option number one, you can either go for an appeal against the rejected refund claim, or you have the option of saying it's okay if this amount is not getting sanctioned. Let me take the credit back. Sometimes we do it if the amount is very minimal rather than going for an appeal application, because your refund application would have been made by way of debiting your electronic credit ledger. So you have a credit accumulation, you're debiting your credit accumulation, and you're making the refund application for you to get the encashment of it. So quite naturally, when that gets rejected, it is very important that you should receive the credit back, right? So there is a form which is available in the online portal. So once you give the declaration that yes, you want to go for appeal, or no, you don't want to go for appeal. So whenever you choose that no, I don't want to go for appeal, the system will automatically process, or not the system, the officer has to sanction, and based on that PMT 03, the recredit will get sanctioned to your electronic credit ledger. Okay, so this is one part of it whenever there is a rejection. The other part of it, when the amount gets sanctioned, as I said, apart from that, you will also be issued this RFD 05, which is the payment advice for you to receive the money through your bank account details. Now, when it comes to the bank account details, there are two things which you have to be extremely, extremely careful. Point number one is Aadhaar authentication, because we have seen in some of the cases where, once this doesn't happen with those who are regularly getting refund, okay, but for taxpayers who are probably not in the regular course of getting refunds, they do it once in a while. Let's say, for example, a company which is not at all having refunds, but all of a sudden there is a litigation and there is an appeal, and based on the appeal there is a pre-deposit and that amount is probably being received in return. Or let's say there could be some scenarios where the goods are getting detained under section 129, and then we go for an appeal after paying 200% penalty, and when you win the appeal, you need to receive back the 200% penalty which you have paid in advance. So these are some of the exceptions where there is no regular flow of refund. So one practical aspect which, if you're a consultant or if you're a taxpayer, whomever it is, you need to carefully check is that in those kind of cases, you have to ensure two things. Aadhaar authentication. So what I'm saying is not only for exceptions, it's there for everybody. But those who are getting regularly probably would have taken care of this already. But for those who are receiving refunds once in a while, probably may not be mindful of this process because it's a new thing that they are doing. So two things. One is the Aadhaar authentication, because without Aadhaar authentication, you will not get any refunds, money credited in your bank account. The second thing that is your bank account related updation, which needs to be, obviously there is a bank account updation without which you cannot even do anything. That's fine. But whether your bank account is being validated in the GST portal, that is very important. There is a screen where you can go and check whether it is validated or not. There is an advisory also which is available in the GST portal itself, as to how this bank statement validation happens. So only if your bank statement is properly validated, there will be, a tick mark against your bank statement validated. You can see the status. If you go to your GST portal, in your basic profile, you have this bank account details. Against that, you can check whether your bank account is being validated or not. So that validation is very, very important for you to receive the money, because if there is no point in getting the refund order unless you actually realize the money. Okay. So this is where your GST, this is how your GST portal looks like. So under services, there is a separate tab for refunds. So in that, you are going to make the refund application. Okay, so it's completely electronic refund application, especially starting from 2019. So before that, at least we have to submit it manually. Apart from generating ARN, with the ARN, we need to submit it manually. But all those things have been done away since September 2019. Okay, so as I said, these are all the broad categories of refund which you can see in the GST portal. Once you get into this refunds category and make an application, you will see these are all the categories in which refunds are possible in the GST portal. So some of these are, one is only with the cash ledger. Some of these are using the ITC. It could be like export or SEZ or accumulated input tax credit, that is inverted duty structure, or deemed export. These are some of the categories where you are going to get ITC as refund. Your input tax credit is going to be debited, and you are going to offer that for you to get the refund in the form of cash. Okay. There are some categories where it's nothing to do with the ITC, but you are probably making excess payment of tax, or export of services which has been made with the payment of tax, or SEZ supplies to, I mean, the supply which is made to SEZ. So some, and as I said, intrastate versus interstate, wrong hit under which the tax has been paid. So these are some of the categories where you're not getting the refund of the ITC, but you're getting the refund of the tax amount which has been paid. Okay. So these are some of the, scenarios in which you are going to get the refund. But what is most important is this any other category. Okay. So in fact, it's a very specific instruction to the officers to have a very careful scrutiny when it comes to any other specific category, because it's very too wide or too generic, because whenever you don't have an option to go under any of these categories, is the only possible option through which refund can be even be applied. Okay. So you have to be very, very careful before you make an application in this any other category, unless and otherwise you are very sure you don't have any other option in these specific categories. You should not go for this residual category. So once you have made the refund application and through your ARN, you can basically track the status of your refund application. This is how the status looks like. So in your GST portal, you can enter your ARN, and for the particular ARN, whatever is the status of the refund as we stand at any point of time, that can be tracked in this. So yes, coming to the instruction which has been given to the officer, this was an instruction which has been given in 2022. This is not, just a circular, but rather a instruction which has been given for the officers for internal purpose. Okay. Some of the things which are very important to note here is the officers have been communicated to pass a speaking order. So speaking order meaning what? There should be a complete clarity as to how the refund is being sanctioned or rejected. Okay, so the order should speak for itself. That's what is called as a speaking order. So every single detailing about the refund, as to why it is sanctioned, as to why it is being rejected, everything should be documented very clearly in the order. So the other important thing that we also had to be mindful is about the post audit cell. Okay, there is a post refund sanction wherein the audit gets audit happens, and that needs to be concluded within 3 months, because there is a time limit within which appeal can also be applied. So any claim which is above 1 lakh will go through this post audit cell. So these are some of the procedures which have been given for the officers. So as a taxpayer or a consultant also, it's very important for you to know what instructions are being given to the officers, because it's quite important for you to be vigilant on whether the officer is following these instructions, because anything which is not in line with abiding by those instructions, it means, like, if at all it's going to result in any kind of rejection of the order or rejection of the refund application. In those situations, the rights of the taxpayer will be known only when they know what instructions are being passed on to the officers. The same thing goes with officers also. It's quite important that they should be aware of what is the procedure that they need to carry out whenever they are, sanctioning the refund. So I'm not getting into all these detailing for want of time, but yes, you can always go through this. As I said, there is a CBSE instruction 3 bar 2022. It was issued in June 2022. So at that point of time, a detailed explanation has to be given as to how the refund should be sanctioned in the first place. And post sanction, what is that needs to be done. So as you can see here, in fact, refund application particularly fell under other categories. So that even it talks about other categories, what needs to be done. Okay. So the next part which we are going to discuss is in relation to some of the amendments which has happened very recently, which has some or other direct or indirect impact on the refund applications. Okay. So one aspect is that, as you all know, one is a very minor technical one, because ITC originally was on provisional basis, and then they have amended to make it that whatever is being claimed is the final ITC. There is no concept of provisional basis ITC. This was made in Finance Act 2022. In line with that, same thing goes for GST refunds as well. So whenever there is a refund of ITC, that's not on provisional basis, that's a final one, because ITC is final. Okay, this is one thing. The other one is, when it comes to the interest, very important thing. Most of you would be, wanting to ask that what happens when there is a delay. Okay, so before that, we need to know what is the time limitation. So once the refund application has been made, from the date of acknowledgement, that is RFD 02, within 60 days, refund has to be sanctioned. In fact, there is also one circular wherein CBIC very specifically communicates to the officer that, if I'm not wrong, in that circular 125, master circular only. So it specifically, there is a communication to the officers that they have to process the refund within 45 days, considering that there is also a dispersal of amount that takes place. So in that circular, they would have very clearly mentioned that the 60 days time limit is from the date of acknowledgement till the date on which the money gets credited in the bank account of the taxpayer. Which means for this accumulative period, it's only 60 days. So they would have mentioned a very specific instruction to the officers to sanction it and to process it within 45 days. I still remember, if way back in 2018, 2019, those kind of years, there used to be a fortnightly refund drive. The 14 days is an exclusive allocation of time for officers to completely process and sanction all the refunds which have been pending. So currently, of course, everything, predominantly it's being monitored through the through the system generated reports. But of course, the impact here that we wanted to discuss is what happens if there is a delay in sanctioning this refund. So 60 days is the time limit. If it's taken more than the 60 days, what would happen? So Section 56 very specifically provides that 6% is the interest rate at which this money has to be paid. Okay, I know you'll be wondering, if you have to pay any kind of delay in taxes, or delay in reversal of ITC of anything of that sort, then it's for 18%. But when it comes to government paying any kind of interest, it is only 6%. Okay. So if there is a delay in receiving this refund, it is only 6%. Okay. But I just want to pause here and try to understand, is there anybody who has actually got this interest of 6%? I'm curious to know. I mean, at least to my knowledge, I don't think anybody has received this 6% interest, except for some cases where there is a court order. If there is a writ petition and then the court orders that you should sanction this refund within this so and so time, along with 6% interest. So I have never come across a scenario where the taxpayers have been sanctioned along with interest, or even if that is being asked for, also that has been given. So I'm happy to receive only no. Okay, but that's the sad scenario that we stand today, where we stand today. Okay, so I have never seen any scenario where there is interest is being sanctioned. I know for that matter, in fact, income tax, it's quite possible to get the refund sanctioned along with the interest also. That's happening automatically. But in GST refunds, this interest is becoming only a dream, but it's never coming true. But having said that, all of a sudden in 2023, there is a recognition, open admission, which has been made when the Finance Act recognizes that though Section 56 provides for a provision, there is a provision which is there for the interest that needs to be paid back along with 6%. But having said that, there is no mechanism which has been prescribed in the rules as to the manner in which it has to be computed. Okay, so amendment has been proposed to this extent. This is just for your information, but somewhere at least the lawmakers are making an understanding or an acceptance of the fact that there is no procedure which has been made on place when it comes to this GST refund. Okay, so the next interesting part, which I just thought of taking it up, it's not again on the fundamentals. It's something to do with some of the interesting aspects of it. We all know how the interest, not the interest on refunds, interest not the interest on the delayed refunds, but rather interest when it comes to your tax payments. So the interest under Section 50 is 18%. We all know, but we also know that this interest, how it needs to be calculated, it has undergone a couple of changes in all these years. Interest, whether it is gross liability or on net tax liability, whether interest is applicable on ITC availed but not utilized. So again, there was a retrospective amendment to call about it. And then whether interest is 18% only on the ITC availed and utilized, or availed but not utilized. And again, whether 24% interest or 18%. So some of these kind of confusions or challenges have always been there, but by and large, the interest related provisions or calculations have kind of got settled. I will not say 100% it has got settled, because there are still a lot of anomalies, especially if I have to mention, till now also, whether I need to calculate interest headwise or should I calculate on a cumulative basis. Should I take CGST, SGST, IGST all together, because it's one nation, one tax. So let us say if I have credit balance in CGST, SGST, should I still be answerable to pay with interest at 18% for any deficit in IGST? So these kind of challenges, of course, for CGST, SGST versus IGST, there is already circular which has been given. But between CGST and SGST, there is no clarity. But of course, we agree that there is no option for cross utilization between CGST and SGST. But the law also says that when it comes to the set of procedure, first thing you need to allocate it towards CGST, and then only you should come to SGST. So these kind of set of procedures are also creating some kind of accumulation in one hand, whereas there is a deficiency on the other hand. So whether interest needs to be paid on these kind of cases, these are still under dispute. Okay, but the point what I am trying to impress upon is, if at all for any reason you have paid interest in excess, okay, can you get this interest refunded? So for any reason you have paid. So our topic today is only on refund, right? Not on interest. So my question here is, so I want some answers, please. Can we get refund of excess interest paid, since we are talking about refunds? See, though we are touching upon some of the basics, I also want to give you some kind of thought process, which are more relevant to the kind of issues that industries are facing today. Okay, some yes, no. Okay, let me give my answer. My answer is definitely yes. Okay, can I get refund of excess interest paid? Definitely the answer should be yes, because I'm just making a comparison with some other provision. These are not the provisions or amendments which has happened in interest. This is on some of the unentered waste generated as a production of fish meal. So some or other aspects. If you see those words which has been highlighted in red, it clearly says no refund of what has been already collected. Okay, but when you look into the amendments which has taken place for interest, Section 50 has undergone multiple changes. So whenever there is any kind of amendment, nowhere it talks about anything that has been already paid, there is no refund, right? Which means if the law is silent on it, it's on the taxpayer to get the refund sanction. This is another interesting case from the Gujarat High Court. In the case of Comsol Energy, we all know what happened in the Mohit Mineral case. IGST on ocean freight has been completely done away with, right? So what happens in this Comsol Energy is that they have claimed for a refund of whatever amount that has been already paid, under this IGST on ocean freight. Initially, it was being rejected, but then the Gujarat High Court upheld it in favor or held it in favor of the taxpayer, saying that, see, here it is not a question of tax because the levy itself has been invalidated. When the levy of this IGST on ocean freight itself does not sustain, then whatever money that has been paid, that is only an amount which is not a tax. Okay, so if you have to borrow a similar logic, you think of it this way: if at all you have paid some excess amount in the form of interest, then it is not an excess interest. It is an amount, which you have probably paid it in the form of interest. What is legitimate within the law is what is interest or tax to take that form. If that amount is not even payable, then if you have paid something, it is only because, it's only an amount which has been deposited with the exchequer, and that definitely has to be refunded, of course, along with the interest. Okay. So these are some of the complications which I thought, I'll take you through before we get into, again, we come back to some of the fundamentals as well. So the next one is zero rated supply. Okay. So were you all clear on, what we deliberated just now on the interest? So these are purely my views. I'm sure many of you would agree with my view. When there is an excess payment, definitely that excess payment needs to be received as a refund. But here the only thing is, you need to knock the door. It's the responsibility of the taxpayer or the consultant to knock the door and ask for the refund. Yes. So let's move back to understand some of the refunds relating to zero rated supply. Now, what is zero rated supply? Two things. One is export, the other one is SEZ supply. So export is basically export of goods or services or both. The other one is SEZ supply. SEZ includes the developer of SEZ as well, whether it is the SEZ developer or the SEZ zone per se. Okay. So again, supply of goods or services to the SEZ. As I already said, when it comes to this SEZ, there are two options in which the refund can be processed. Let's say I am making a supply to the SEZ zone. Okay. So either I can, supply it without tax, and then the SEZ can claim refund of whatever is there. That's one way of doing it. Or if I'm going to make it with tax, oh sorry, I'm making it the other way. So if I'm going to make it with tax, then the SEZ can claim refund of that particular tax. The other option is I am going to make this supply to the SEZ without tax, and hence the corresponding input tax credit which I have incurred towards this particular supply which I have made to SEZ, that I am eligible to take it as refund from the exchequer. Okay. So these are the two options in which refunds can be obtained under SEZ category. Now, coming to this export. Export, again, there are two bases in which refunds can be processed. When it comes to services, there is only one option. Of course, though we call as two options, but practically it's going to be down to one. But I'll come to it. So export of goods or services, you have two options. One is don't pay tax on your export. Do not pay any tax on your export. Export without payment of tax by way of taking a LUT. So letter of undertaking has to be taken once in a year. So take that LUT, export without payment of tax. Then whatever is the input that you have incurred on your, whatever is the credit that you have taken on your input or input services or capital goods, all these are eligible for refund. Okay. Now, the other way is pay tax on your outward, that is your export. On your export, make the payment of tax and get that amount as your refund. Okay. Now, again, when it comes to goods, there are two ways in which this will get processed. If you are making export without payment of tax, then the inputs can be taken. The input tax credit can be obtained as a refund. But in those cases, RFD01 manual application has to be submitted online. And based on the officer scrutinizing and processing that particular refund application, your refunds will get sanctioned. This is one option. Option number two, as I said, you have to pay tax on your export. That doesn't mean you have to pay the tax through the customs. No, it doesn't work that way. In your GSTR1, when you are filing your GSTR1, you have the option of saying export with payment of tax or without payment of tax. When you say yes with payment of tax, let's say it is taxable at 18%. That 18% is the tax that you are, admitting to pay in your GSTR1 against the export that you are making. So which means in your GSTR3B, using your ITC as well as your cash, whatever be the situation, you can make the discharge of this tax liability. Okay. Now, within the same month, exporters have the option of choosing export with payment of tax for few invoices, export without payment of tax for few invoices. That option is completely available. It's not that once you choose to make the payment, you have to choose it, you have to make the payment compulsorily for all the invoices. It doesn't work that way. Because we have seen in some cases, exporters, they even pay by cash and then they get it as refund. All that is not required. Okay. Now, once you have made the payment, if you are going for with payment, most of the exporters of goods, they only prefer export with payment of tax. The reason being, if you are going for export with payment of tax, whatever is the data that you have entered between GSTR1 versus 3B will get validated. And whatever is the data that is being entered in GSTR1 along with your shipping bill, invoice number, everything, that will get validated with whatever data that is available in your IceGate portal. That is the customs data for your shipping bill. These two will get electronically transmissioned and that gets validated. And if it's all matching, your refund is automatically going to hit your bank account. We have seen successfully lot of exporters who are getting the refund effortlessly. If you file your GSTR 3B, let's say by 20th, okay, refunds people are getting almost within the next 1 week time. Okay, it's in fact 5 days in most of the scenarios. We have seen even 5 days within this, within which this refund is getting. It's actually hitting your bank account in such a short span of time. Okay, the only thing here is that make sure that your shipping bill is properly being filed and all the data are properly reflected in your IceGate portal. And the same set of details should only be uploaded in your GSTR1. GSTR1 should properly match with your GSTR3B. If all these things are properly matching, including your shipping bill number, there should not be any kind of SB errors. SB errors do happen sometimes if there is mismatch in the data between these two records, or sometimes if your scroll is not being generated or the EGM is not happening, export general manifest. So these are some of the aspects which needs to be taken care. If all these are properly through, we have seen scenarios where people are getting refund sanctioned within or in less than 1 week from the date of filing the returns. We have got such refund sanction even for crores of money also. Okay. So this is one methodology. But here the only bottleneck or one of the bottleneck is that capital goods related refund cannot be claimed. Okay. Capital goods related refund cannot be claimed through this automatic refund category. That can be taken only through without payment of tax, wherein an application is being submitted and then that is being received. This is one thing. The other thing which, when it comes to the services also very similarly, there are two options, with payment and without payment. But here in services, there is no such automatic refund, credit mechanism. In both the cases, whether it is with payment or without payment, in both the cases, RFD01 application to be made in the portal is the only option through which refund can even be obtained. Okay. So, but what is the difference? Why somebody has to go for with payment? Quite naturally, as I said, the capital goods related refunds are eligible only in one category. It's only in the with payment category, not under without payment category. So without payment category, you can never get capital goods refund. Only in with payment category, you can get refund of capital goods. Okay. So this is something that we have to be very, very careful about. So moving on further. So I hope all of you have got the basics of this GST refunds with payment, without payment, export of goods, services with payment, without payment, right? Can I get some yes responses? See, because it's very, very fundamental. What we are talking is not something advanced. It's fundamental. Based on this, we have a lot of complications to discuss further. Okay, great. So I've got a lot of good feedback. So I'm moving on further. So I hope this space is fine with everybody, right? Can I get some response on that as well? Whether the speed is fine. Okay, yes. Okay, good, good. I'm actually receiving good responses that this space is fine. Now moving on further. Uh, the next one is, how do you calculate? Where, as I said, there are two options: with payment, without payment. Even it comes to with payment, it's a straightforward case. Whatever is the tax amount that you are paying on that particular invoice, which is raised for export purpose, that tax is what you are going to get it as refund. No confusion. But without payment, when you are making, then what is that you are getting it as a refund? It is your accumulated input tax credit. So how do you calculate the refund? Whatever is the net input tax credit that is availed for that particular relevant period. As I already said, relevant period need not be 1 month. It can be any period for which you are making the refund application. That is what is relevant period. So whatever is the net input tax credit that is being availed during that period, okay, as I already said, only input and input services are permissible here. Capital goods are not to be included. Okay. Now coming back on this net ITC, you have to apply the ratio of the turnover of zero rated goods and services divided by the adjusted total turnover. Now, what is this adjusted total turnover? Total turnover, from the total turnover, you have to eliminate the turnover which is exempted from tax. Now, why are you reducing it? Any thoughts? I just want to keep it interactive. So, what I told is it's a pro rata calculation. To keep it simple, it's only a pro rata calculation. Whatever is your ITC into export divided by total turnover. Am I clear? So, when I say this total turnover, it is not a mere total turnover, it's an adjusted total turnover. Now, what is adjusted? Most importantly, your exempted turnover is being removed in your denominator. Why is this exempted turnover removed? Any thoughts? There is a logic for it. So I just want to see some response. So let us say in a month I have 100 crores of total sales. Out of the 100 crores of total sales, you have this exempted is for 10 crore. Okay. Otherwise, domestic supply, which is taxable supply, is for 20 crore. Okay. So 20 crore taxable supply, 10 crore exempted, remaining 70 crore is your export. Okay. So here, take whatever is the input tax credit or input tax credit on the goods and services, not capital goods. Take this net ITC into 70 divided by not 100 but only 90. Any guess why it has to be 90 and not 100? So that's right. So no credit on exempted, and ITC is not eligible for exempted turnover. As you rightly said, for the exempted turnover, already you would have made such similar, pro rata reversal in your rule 42, 43 itself. If there is anything directly attributable to exempted, you would have already, removed it. Correct. So similarly, if there is anything which is commonly attributable to exempted turnover also, this net ITC, what you are factoring is the ITC minus reversals, which are already being made in GSTR 3B, including that rule 40 to 43 reversal. So which means the credit what you are taking here, net ITC, is the credit that actually relates to only the export and taxable turnover which is made domestically. It does not include the exempted one, and hence it is not required to include it in the denominator. Another interesting fact for you to understand is what happens if your export is a product which is otherwise exempted domestically. So my question is, let's say, for example, some kind of food product. Okay. Most of the food products are probably being exempted in India. So if the food is exempted in India, if you are exporting it, then are you eligible to take the credit or not? Are you eligible to take the credit or not? Are you eligible to get the refund or not? Okay. So I have received a response. What if exempted goods are exported? I think it needs to be reported. No, I'm sorry. So what happens if it is, exempted? If exempted goods are being exported, it is still an export. When it comes to export, there is no necessity to differentiate if it is exempted or not exempted. So this particular clarity is available in IGST law. IGST law very clearly it says that even if exempted goods are being exported, still input tax credit is eligible on such, in relation to such products which are being exempted. So which means export does not differentiate what is exempted, what is taxable. The simple logic being here is that the consumption takes place outside India. Since the consumption takes place outside India and India cannot export taxes, You can only export goods and services. You cannot export taxes. So it's very important that the Indian law should give refund to these exporters for the tax which is being incurred in India. If that is not probably given, then this money will get added to the product by the exporter and that gets passed on to the other country, which is not permissible as per the WTO, right? So on those lines, it is very important that India should give refund. See, in fact, if you look at it the other way, ideally, for exporters, there should not be any tax in India. Correct. So when there is a goods, when there are goods which are moving outside India, that goods should not carry the burden of Indian tax because the consumption of these goods happens outside India. Correct. So typically, exporters should not even suffer with this kind of taxation. Ideally, any supply which is to be made to the exporters should have been without tax itself. But it is not practically feasible for the lawmakers to keep a track of those kind of transactions. So that is the reason why they are shifting the responsibility on the exporter, saying you take the input tax credit on it and then you get the refund. Okay. See, in fact, it's quite an interesting or it's a high level litigation, if I may have to call for it. Ideally, if you see, there is no concept of input tax credit for the exporter. Is it not? For exporters, it's not a value addition. They are not even eligible for input tax credit. It's only the tax that they have suffered in India, which is what they are going to take it as refund. Okay. So on those lines, is it even fair to distinguish what is eligible input tax credit versus what is ineligible input tax credit? So section 17.5, should it even be operational? These are some of the questions that needs to be a constitutional questions. I would put it that way. Is it fair, to even restrict or make some of the credits to be ineligible for the exporters under section, even if it is under section 17.5? Okay. Because they are not going to make use of these credits for any further supply in India. End of the day, everything is being exported, and hence, ideally, everything should be given as refund. So anyway, as we stand today, as the law stands today, this credit is subject to the ineligible credit scrutiny under section 17.5. So which means when I say net tax credit, the net ITC, it cannot or it does not include the credit which are otherwise ineligible under section 17, including section 17.5, ineligible credits. Okay, so only eligible credits can be taken into this category. But of course, we have argumentative points for this. I'm sure if these kind of issues are going to be raised, it will only get settled in Supreme Court. Okay, so as we stand today, the credit what we are talking about is only the goods and services, not relating to the capital goods. But capital goods are still eligible to be taken as refund if you are going for export with payment of taxes. This is permissible in both goods as well as services. Okay. So this is broadly the mechanism or the calculation through which the refund has to be calculated and then it has to be applied in the GST online portal. The next aspect which one has to be aware of is when it comes to the services. Okay, so services, as I already told, even the time limitation of 2 years itself, it starts based on the money receipt or the invoice raised, whichever is later. Very similar logic is being extended even for the calculation also. What is zero rated supply of services? Now that is very clearly defined to say that your payment received as well as your invoice raised. Both the criteria should have been very clearly. See, the formula goes like this, but I want to give you a logic behind the formula. You should have both received the payment as well as you should have raised the invoice. If both these, happens, the time at which both the incident gets completed, that is what is being taken as zero rated supply of services. So to be very precise, the law very clearly defines this: payment received during the relevant period for the completed zero rated supply of services. This is one aspect you have to take. So which means it is completed, invoice raised as well as payment received. The other category is already you received money in advance, but at that point of time you did not consider it. Okay. But now you can consider it if you are raising the invoice at this point of time. Now, same way, this month you are receiving some money in advance for which supply of service has not yet been completed. That you eliminate it. Okay. Clear? So take the total money. Okay. Total amount that you have received during the month plus amount which you have already received for which billing is made in this current month, because already you have not factored it in your refund purpose, minus money which is received in the current period for which invoice has not yet been raised, meaning supply of service is not yet complete. So, which means, to give you the logic behind, both the events should have occurred for you to consider that as turnover of zero rated supply of services. Am I making it clear? Can I get some yes? Can I get some yes? So far, am I making it clear? Okay, okay. We are almost coming to the end of the time that we had, but I'm sure we still have a lot of complications. We are still contemplating on some of the basics. Can I take the permission to extend it for some more time, sir?
Yeah, sure. In fact, there is a feedback from one of the participants, Arvindin sir, that he said session is wonderful. Definitely one more session is required.
Yeah, yeah, definitely,
Mm.
sir. We'll definitely have it. Maybe
Yeah,
next week or sometime also is fine.
yeah,
Okay, so then I'll do something. Let me not rush for the sake of it.
yeah.
I'll try to cover, even if it is 50% of what needs to be covered. If you are going to cover it also, it is fine. We'll keep a cutoff time of 4 o'clock. We'll have another session next week sometime, wherein we are going to take another 1 hour of what next. It can be in the form of complications, or it can be in the form of some of the recent updates, etc. Yeah,
Sure, fine.
sure. So coming back, now what is this turnover of zero rated supply of goods? So here there is one important thing that has been inserted, is that your zero rated supply of goods is restricted to the extent of 1.5 times the value of like goods domestically supplied by the same or similarly placed suppliers. So to give you an example, if your per unit rate, which at which you are supplying same or similarly placed goods in for your domestic customer, let us say if it is 1,000 rupees per kg. If your export value is say 2,000 rupees per kg, then though your actual export value is 2,000 rupees, still for the purpose of this refund calculation, you should not consider 2,000 rupees. Rather, you should only consider 1,500 rupees, which is 1.5 times that of your domestically supplied, similar goods. Okay. So this is a restriction, but this restriction has been already challenged in the Karnataka High Court, and the successful, favorable order which has been given in this. Okay, this is Rule 184C. Okay, so that has been challenged. There is a case called Tombow imaging. So, okay, on the particular decision, I also have some slides relating to that particular decision. Okay, so the constitutional validity of this has been challenged there. Okay, we'll also be deliberating on that. The other aspects which needs to be factored is your invoice could be in different terms. There are a lot of INCO terms which is there, FOB, CIF, or CFR. There are several INCO terms which is there, or DBP, whatever it is. But for this particular purpose, you have to factor only the FOB value. You should not take the other values. Okay. There is, to be very honest, this is also something that needs to be challenged. But having said that, what is the basis of the law or the CBIC to come and say that it has to be at FOB value? The logic is very simple. All the foreign trade policy, wherein the export promotion related, the incentives are being given, everything is based on FOB. So let us say there is an exporter. The same product is being exported by three different exporters. One is operating in FOB, the other one is operating in CAF, the one more person is operating in DDP. So to keep a level playing field for all the exporters, refund will be processed only on FOB basis. So that's the whole objective. But to what extent this holds good in your GST refund is highly disputable. Okay, but I'm not getting into those litigations now. But having said that, as we stand today, it should be only on the FOB value. Okay. The other one is value declared in the tax invoice or bill of supply, whichever is lower. Okay. The FOB value or the shipping bill value, whichever is lower. Same way, the value invoiced in the declared in the tax invoice or the shipping bill value, whichever is lower. Ideally, differences could be due to this anti-dumping duty in some cases, or forex differences could be there in some cases. So whatever be the situation. Okay. The next part which we also have to know is, see, for exporters, there is something called as duty credit scrip. Okay. So there is a percentage on the FOB value which will be given in the form of a scrip, and that scrip is, tradable. that script will be sold, and money receipt will be taken out of it. So what happens when the scripts are sold? Initially, if you go back in 2017, originally the script was taxed at 12 percentage, and then they reduced it to 5 percentage in October, November 2017 itself. Okay, but eventually it has been exempted from that time itself, 2017 onwards. But what is the purpose for why the script is being exempted? See, first of all, it is the script itself is nothing but a benefit that the government is giving for exporters, right? So it's part of their export promotion policy. Having given a incentive scheme, having given script in the form of an incentive scheme, which can it even be taxed? The question is no. Obviously, it cannot be taxed because it has to be an exempted one. But the next important question is, now that it is exempted, okay, then is it subject to Rule 4243 reversal? So that question was kept open-ended until 2022. Okay, in July 2022, there has been an amendment in Rule 4243 wherein it has been very clearly mentioned this duty credit script will not be considered as exempted supply for the purpose of this Rule 42 and 43. Very similar to how your interest on fixed deposit operates, right? Your interest income is not considered as your exempted for the purpose of Rule 42, 43. Very similarly, duties credit script also need not be considered. Okay, but is it a retrospective amendment? The answer is no. Okay, but to what extent this holds good? Because see, the problem is not when an officer tries to apply this for the common credit, because common credit would be a very small portion. On that, if they are going to apply this itself will be like, say 1 to 5 percentage of the export value. So it will be very insignificant. Problem arises when the officer considers the entire credit as common credit and then tries to apply this under Rule 42, 43. Okay, that's when there is a huge hit for the exporters. Ideally, that should not be done, because one side you give something in the form of incentive, the other side you take it away in the form of this reversal and other things. That's not the fair approach. Okay, the next aspect which we have to be aware of is the recredit of erroneous refund which has been repaid. Okay, so let me put it simple. Okay, I have the credit. Now I want to make an application of refund. This credit, accumulated credit, is what I want to encash it as refund. I make an application, RFD01, officer is sanctioning it to me. So when I make the application itself, I have debited the electronic credit ledger balance. By debiting only, I have made the application. Now the officer is going to process this and then he is going to give it to me in the form of refund, which I'm receiving it by cash. Subsequently, officer comes back and say, no, what I given you as refund is erroneous. So this is this calculation. I recalculated it. And then I find that, no, this is erroneous refund which I have sanctioned. You return it. So this could come either by officer pointing it out by way of a show cause notice or whatever it is, or the taxpayer himself or herself is finding out on a suo motu basis. Okay. So either of these two cases, I'm finding out that there is an erroneous refund and I'm admitting to repay that refund. Okay. Now I had credit, I give you the credit and then I got back the cash. Now I give you back the cash. Are you not supposed to give me back the credit? So that is what is this recredit mechanism. Okay. So the recredit mechanism, initially it was not there in the law. Okay. We used to struggle before 2022. So that has been introduced only in July 2022, wherein Rule 86(4)B very clearly says that where the registered person is depositing the erroneous refund, whether it is through with payment, without payment, whatever be the case, along with interest and penalty, okay, through cash, through this DRC 03, then the erroneous refund has to be recredited back to the electronic credit ledger. Okay. And there is also a form which has been prescribed in PMT 03A. In fact, if you see this particular change itself, this notification itself has been brought out mainly because of a case decision from Gujarat High Court. Gujarat High Court, there was a ruling in April 2022. I'm just, this is a ruling in iTech Plast, India. So I'll only highlight those words, which are very interesting and very relevant also. We see here, I'm reading from this fourth line. It cannot be that, sorry, I'll read it even from here. Here, the simple issue is one of restoration of the ITC, which was erroneously refunded and subsequently recovered. If the authorities have accepted that there was an error and instantly accepted repayment of the erroneous refund, as a corollary, the credit of the ITC must be restored. Is it not simple? So it cannot be that for the purpose of repayment there was an error, and for the purpose of restoration of the ITC there was no error. So to this extent, the court has been very stringent on this particular case. There is no question of any refund of ITC at all. This is not a refund of ITC. See, what happened is in this case, they rejected the refund, saying, it's not eligible for refund. Then they said, no, no, this is not even refund. I'm only asking for a restoration of the credit. Okay, the question is one of restoration of the ITC in the electronic credit ledger and not a refund thereof. Hence, any reference to this 9610 is completely misconceived and not tenable. Okay. So at that point of time, the lawmakers have very clearly recognized or realized that there is no mechanism for recredit, and that's the reason why these kind of disputes are coming up. And then they have introduced this rule 86.4b. Okay. And as we stand today also, there is no mechanism which is very clearly established in the GST portal for this recredit to be processed. Okay. So what this particular circular says is that currently there is no automated feature or facility which is available in the portal. So what you do, when you deposit the erroneous refund through your DRC03, at that point of time, along with that, you also attach something called as Annexure A. That Annexure A is available in this particular circular, circular 174. Okay. Attach that Annexure A. Okay. And based on that Annexure A, officer will have to process this recredit within 30 days, preferably through PMT03A. Okay. But I have experiences where we have not received the recredit also in this 30 days because officers are still confused as to how this recredit mechanism works. Of course, we have gotten some cases also, but we are struggling in some cases also. Okay. So it purely depends upon, there is no clear cut government order or the procedure which has been communicated in writing to them. So some of them are aware of it, some of them, even if we make it aware also, it's still a struggle. So but the important point here is some of you, especially in this last 1 or 2 years, there were several disputes which are raised by the department calling the past period refunds as erroneous refund. So if there is any scenario where you have admitted and paid this refund, erroneous refund, repaid it, then make sure you are also asking for the recredit. See, you get back the recredit and use it for your current payment. Why should you miss it out? Okay. The only question is it relating to ineligible credit? If the credit itself is ineligible, in fact, even in that situation, you are supposed to get the recredit and then reverse the credit, okay, which is ineligible. If otherwise the credit is eligible, but it's only a matter of erroneous refund calculation, then in those cases, you admit and you have repaid the erroneous refund, then you are supposed to get back the credit, which you have originally debited. Okay. So if you have missed out on any of those situations, make sure that you write, to the officer and get the recredit. Okay. Another very, very practical question that may come up is, okay, I have made the repayment through DRC03. I'm not aware of this annexure, or probably I made it before even this annexure has come. Okay. So now what do I do? There is no mechanism which is available in the law. A very practical approach which we are following, that is what I am probably trying to share here, is that we make a refund application in any other category, saying I am supposed to receive this recredit, which I have not received, and you please give me this recredit. This is not a refund application. Okay, that's why I'm saying you have to go for any other category. So I am supposed to get the refund recredit, which I have not got. I have already paid this erroneous recredit. Now you please give it back to me. Okay, that kind of a query can be raised because the main reason here is there should be some period with which it has to be given, right? If that is never happening to you, then where is the way? How is the way for a taxpayer to go and communicate it to the officer? Because GST portal is one-sided. There is no option for the taxpayer to give a communication to the officer except for a refund application. So that's the only way in which it can be probably made. This is one practical scenario. This is not prescribed in any circular or anything. This is what we follow where this recredit is pending for a long time. Okay, this is one thing. The second thing is, does it go through the 2 years of time limitation? My individual opinion, no, because this is not a recredit. This is not a refund. The 2 years period is only for refund, but this is a restoration of the credit which has been originally debited. So this cannot come under section 54. It's a mere restoration which has to be operational in any case. Okay. So this is again go and quote it anywhere saying, Sharda ma'am told this in this particular webinar. Probably if you still have any scenario of that sort, I would suggest you please take an independent opinion from tax expert. Okay. So the next part is, highly litigated, highly personal opinion. Should I pay this erroneous refund? This particular rule is very clear. The rule says you should pay it along with interest and penalty. Okay. Only then you should apply for recredit. Okay. That's very clear. Only then you are eligible for recredit. But my question is, should you pay it with interest and penalty? Again, I go back to the same question. If you look into one of the very recent decision from Madras High Court in the case of HR Motor, wherein the question is, it has been challenged that there is a credit balance which is available for the taxpayer, then why should I pay interest for the delay in return filing? Because I have sufficient credit balance. In fact, that has also been accepted, and the rule also has been amended to that extent. Rule 88B has been already amended for interest calculation. So you'll all be knowing that even if there is a delay in filing the GST or 3B return, to the extent of your sufficient credit balance which is available, you need not pay the interest. Interest is payable only for the cash component. So what is the logic behind this? Cash is equivalent to credit, is it not? If cash is equivalent to credit, then when I got this erroneous refund, I gave you my credit and then I got the cash. Now I am giving you the cash and I am asking for refund of the credit. Now, where is the question of revenue loss here? Then why is there a question of interest and penalty? So this is again, as I said, it's purely a litigation matter. Okay. So it's some of the interesting matters that we are also challenging in the higher forums. So one thing that you have to be very clearly aware is that these are things which cannot be, which cannot be a prima facie conclusion or solution, but rather something that has to go through the legal process for you to get the justice on those things. Okay. So the next part is SEZ supply. Okay, probably I'll quickly wind up with this SEZ supply. I'll take 2-3 minutes. Okay. So SEZ supply, basically only when for goods, only when it has been admitted in full in the special economic zone for authorized operation. See, this authorized operation has its own challenges because originally the act, that is section 54 or the section 16 of IGST, both were silent when it comes to this term authorized operation. It was available only in Rule 89. So the question here was whether the rule can put forth a condition which is otherwise not available in the Act. Okay. So on those lines, the Act has also been subsequently amended. Of course, it with only prospective effect. Okay. The question remains silent when it comes to the past period. So only for authorized operation, SEZ supply for goods, it should be admitted in full in the in the SEZ zone. And for services, such evidence regarding receipt of services needs to be submitted. Apart from that, statement 5 needs to be validated in the GST portal for RFD01 refund application. So again, when it comes to this SEZ, one of the recent change which has come in 2022 is specified offices or authorized offices. There is a SEZ rules which is very specifically governing for this particular SEZ, and a specified officer is actually, it's supposed to be only the joint commissioner or deputy commissioner or AC, only the higher categories. But authorized officer even includes the inspector or preventive officer, all the superintendent, everybody is covered. So some of the cases, the acknowledgement or the endorsement has been given only by the authorized officers. So the dispute has been raised in GST refund as to these people are not the specified officers. So this acknowledgement or this endorsement is not being accepted. So to nullify those kind of issues, they have already given that whether it is specified officer or authorized officer, somebody should basically do the endorsement. Who is the SEZ officer? So this has been already amended. Okay. So for you to get the SEZ refund, what needs to be done? What is most important thing? If it is SEZ supply, there should be endorsement. Okay. Endorsement is the first and foremost thing. That endorsement should be by the SEZ officer. Okay. As we stand today, already this DSPF functionality is available, which is an online functionality. So through that online functionality, this DTA service procurement form, for the DTA service procurement form, this can be taken as an endorsement. Okay. So this endorsement is something very, very critical. Only if your invoice is specifically endorsed that this particular goods or services have been actually received by an SEZ developer or an SEZ unit. Only in that situation, it is feasible, it is possible for you to get the refund. Without the endorsed copy, it is impossible for you to get the refund sanction. Okay. One interesting case for SEZ supply related matters that anybody who is probably willing to go through at a higher level, yes, you can go through this Lenovo case from Madras High Court. It's a very interesting judgment. Unfortunately, that judgment has been taken away in the headlines because one of the line that that would have been given in that particular Lenovo judgment of Madras High Court is that the time limitation, 2 years time limitation, it cannot be that after 2 years it cannot be claimed, something of that sort it would have been mentioned. But that is not the whole crux of it. Okay. For SEZ supply, that Lenovo decision, wherein that there is a series of fact, it is a fact based decision. Okay. You cannot merely call it as a precedence, of course, unless and otherwise your facts are completely matching. Okay. So it's a very interesting judgment for anybody to go through. Lenovo from the Madras High Court. It was I mean, should be less than a year. If I'm not wrong, should be somewhere around November, December 2023. That's what my memory says. Okay. So less than a year ago, this particular judgment had come. Okay. So the self-declaration and then this endorsement is the most important thing. Otherwise, the procedural aspect of claiming a refund in the portal is by and large the same. In any of these refunds, one most important part, whenever you are claiming refund of accumulated input tax credit, the most important part is your ITC availment should be based on 2B. If your ITC availment is based on 2B, then your refund process gets really quicker, faster, and easier. Okay, because the moment the officer is satisfied that your credit availment is as per 2B minus your ineligible credit or whatever it is, then the credit eligibility is not being questioned. Then so is the case of refund as well. Okay, so the next important part, I will probably give it a break here. Okay, because this is one of the very very recent update from 54th GST Council meeting. So this rule 9610 is proposed to be done away with. But I'm pretty sure since there are a lot of people who are not even familiar with refund per se, discussing about 9610 or 18948 4B and the issues relating to that EOU or advance authorization would be too high unless and otherwise we give the basic structure of all these things. So should we draw a line here, sir?
Yes, yes,
Yes, yes.
obviously we have to. Yes, yes. So yeah, we have already exceeded the time, and there are queries also, so we can address them. And as
Okay.
yeah, so I'll read out one by one query.
Okay.
The first query, my client is from Shiv Kumar, Shiv Kumar sir. Sir, you if you want to ask you can ask through voice also. You can unmute and you can speak also. What you have written. Okay, so Shivkumar sir has written that my client having a cash ledger of 10 lakh rupees each, CGST and SGST, due to supply of goods to government department. They deducted tax at of 2% on whole supply, even to
Yes,
exempted
yes.
supply also.
Yeah, if your question is, can I get this as a refund? The answer is very clearly yes. There is a specific circular also which is available for this. Okay. So, most likely the probability is that, see, this is a very common industry-wide issue. So, when you are having any kind of government contract, there might be a delay in receipt of this, TDS, but then you may not be probably delaying your tax payments. So you would have initially made the tax payment because the contract value is also very huge. You would have made a tax payment initially, and then if your credit is getting accumulated, now this is your cash balance. See, if at all it's a credit balance, you cannot do anything about it. But if it's a cash balance, since it comes to you in the form of cash credit, you can always take the refund as well. That's completely allowed.
Okay. Next query is from Arvindan sir. Whether certification by authorized officer at SEZ on invoices is mandatory for supply to
Yes,
SEZ.
100%. Without any doubt. Endorsement is mandatory. Without endorsement, there is no proof that you have submitted it for SEZ, right? How do you prove that your supply is made to the SEZ? So first thing, definitely there should be an endorsement that you have supplied to the SEZ and that it should be for authorized operation. You can check 66 or 67 is the list of authorized operation. Even if you Google search, you will get that list. If your goods or services is in relation to that authorized operation, then you are eligible for the refund.
Okay. Next query is from Raji Reddy sir. Madam, can a refund of accumulated credit be rejected, stating that taxpayer took credit on ineligible services like employee insurance services?
Sir, actually, you see, if you look at it, per se, if you look at it, the way in which the refunds are being processed, or the way in which the law has been understood and applied as we stand today, yes, ineligible credits are not eligible for refund. But I already deliberated on this particular point. This is a high level issue if that has to be raised, as in why the law has to differentiate between eligible credit versus ineligible credit when it comes to the accumulated refund for exporters, because end of the day for exporters, it's all the taxes that has been incurred in India, which against which there is an export which has been made outside India. Okay, so this is a fundamental question wherein we are going to probably question the law per se, and I don't think this matter can get settled at any level less than Supreme Court. But as we understand today, or as how it is being practiced today, yes, ineligible credits are not being accepted or processed or sanctioned as refund. In fact, even none of the taxpayers are claiming it for that matter. Your ITC claim itself is only after reducing the ineligible credit, and whatever is claimed as ITC is only needs to be applied for.
Okay, so Raji Reddy sir, you have any submission on this? You can participate.
Hello,
Sir
sir.
Adi?
Hello, sir. I am Venuar Prabhu.
Yes, sir, Venu sir.
Yes, it is
Yeah.
well good and premium class also, no problem. And this is the first time hat trick of exceeding the time also. Not about it, ma'am. It is not a fault, but subject is such a heavy subject that it takes time. No problem about it. Okay. Thank you, sir.
Yeah.
Thank you, sir.
Okay, so next query from
Okay.
yeah.
Yes, sir.
Yeah. Uh, we as tax consultant, within the time limit only officer orders are passed. Okay, it was a feedback for the interest part. Okay, no issue.
Okay. So I think we have a couple of queries which are coming up as well. Okay.
Okay.
So if you have to quickly see, Abhinaya, madam, can I get refund that pre-deposit amount paid for appeal? Yes, definitely. Whatever is the pre-deposit, I already said. After your appeal order is received, there is an option which is available in the portal wherein refund or against the appeal application. You can go there. Your order itself will be available in the drop-down menu, and then you can select it and apply for refund. But one thing here is, if there are two ways in which the pre-deposit is being made. Ideally, the pre-deposit should be made only through your APL 01. When you are making the APL 01, in that you have to mention that the pre-deposit has 10 percentage, and then you have to enter the on your disputed tax amount. This will get calculated. And if you are making the payment through the APL 01, then when you are getting the order also, see, everything should happen online, which means what? Your order should be received online, against which APL 01 should be made online, and the demand should be available online. Against that particular demand only through APL, you should have made the pre-deposit amount. If all these things are properly matching, and finally, if your appellate authority is also uploading the order against this ARN in the portal with the final tax liability, confirmed or not, whatever it is, that also needs to be uploaded online. Only in all those scenarios, this particular APL order will be available in the GST portal when you go for the refund under this appeal application or appeal order category. Okay. And then you will be able to apply for the refund of pre-deposit once you have won the case. Okay. But having said that, some of the times, if all these things are not probably made manually, there may be a situation where though you actually have a favorable order in your hand, appeal order in your hand, you will still not be able to see it in your drop down menu. Those kind of scenario, what we do is we go for any other category. Another scenario is sometimes the pre-deposit, though it's supposed to be paid through APL 01, Some of the taxpayers would have probably hurriedly made it through DRC 03. And officers also accept it. Appellate authority also accepts it through DRC 03. In those kind of scenarios, what would happen is you will not be able to get the refund through this APL category. Then you have to go for any other category. Okay, but ultimately you are eligible for refund once you have won the case.
Hi, Mama. Actually, in just now we have spoke regarding a pre-deposit. No, that question I had raised by myself only. Have you
Yes,
heard
yes.
me? I'm audible.
Yes, Abhinaya, please.
Yes, ma'am. Actually, the thing is, we have applied appeal in on APL 01 and refund, and against order also. The officer has uploaded in portal only. Everything is in portal only. But my question is, we have paid that pre-deposit amount is voluntary payment. So the officer asked us to adjust with 03A. I mean that is
Correct.
so that application is not released yet, right?
See, that application has not yet released, okay. But only one thing that I would be worried in your case is this DRC 03A is your voluntary payment to be matched with your demand. Okay, but here you are actually not paying it against the demand, but you are only paying it as a pre-deposit. It's not that it is not an admitted tax liability. So it should not be, you have to be very, very careful that you making this DRC 03A should not put you into a situation where it looks as if it is a admitted tax liability against your liability, which is outstanding.
Mm-mm.
Okay, that is something you have to be careful about.
Okay, ma'am. Ma'am, and one more thing, I'm having the question. Actually, we have made the payment, and the order is also got released, and the payment due outstanding section, the amount is in minus balance. How to get that minus balance refund, ma'am? Actually, the officer had automatically debited from our electrical credit ledger. Okay,
Okay, see,
example
it's a
one,
very
ma'am.
case specific matter. See, I would say this has to be something that we have to go through in the portal only, and then I'll be in a position to answer you better.
Okay, okay, ma'am. Okay, okay. Thank you.
Sure. So any other questions?
Participant
Shall
can
we
ask a query
conclude
directly.
yeah. So shall we conclude the session, sir, or
Yeah, yeah,
because we
sure, sure. Yeah, already we exceeded. Okay.
yeah we
So
have
still
exceeded.
there are, yeah, queries are there. Okay, participant, don't worry. We will answer to this query, whichever is not answered in the session in this chat box. Maybe from the session you would have got some idea. Okay, so let us um, wind up. Thank you, participant, for joining the session and allowing us to share the knowledge with you all, because it is because of you we can come here and share knowledge with you. And special thanks to Sharda ma'am, who has taken her busy schedule time from busy
And I'm
schedule. And
sorry that it's not possible for me to complete it. As I said, we'll probably take up another session as well because there are a lot of recent changes as well in terms of Rule 9610 and the inverted duty structure. A lot of complications are there ever since 2022. Probably we'll discuss on those aspects as well. Some of the this Finance Act, there are some changes which are there in Section 16, Section 54. So these are matters which we can take up in another session for sure.
yeah, sure, sure. We will have another session, of course, because wow, topic is such a thing, and ma'am is already uh, always there to share knowledge. And okay, so until we come with another session or the next session of this GST refund, until then, it is thank you from Online Tax Update and from GGS's team also, especially Sharda ma'am.
Thank you, sir.
Thanks,
Thank
all.
you so much for this opportunity as well.
Yeah.